Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to be looking at the overall portfolio performance, the buying power, my individual stocks and how they are performing, as well as my watch list and the prices that I would be willing to pay for the stocks on my watch list. So jumping in, today we are down right around $140, down about 0.3%. The 1 week mark, we are down $260 or down about 0.5%. The 1 month mark, we are up $1,072.17, up 2.16%. The 3 month mark, we are down $50 or down 0.1%. Year to date, we are down $150 or down 0.3%. For the 1 year mark, we are down $3,424.26 or down 6.33%. And then all time, we are up $15,027.41 or we are up a positive 42.20% all time. Next, we have a buying power of $52.30. Jumping into the stocks now. Currently, Realty Income is sitting at $60.93, down 63 cents today, or down 1%. 143 shares, $8,700 worth of market value. Average cost is $67.10. 17% of the portfolio is in Realty Income. Today, we are down around $89. Total, we're down $880. Down nearly 9.2% on Realty Income. And guys, this is a good buying opportunity for one of honestly, the best premier REIT, I think, on the entire market. They do command a little bit of a premium, but guys, they have had over 25 years of dividend growth. They boost the dividend every quarter, as well as they pay out monthly, so you get more compounding with this stock as well. So a lot of reasons to like Realty Income. I actually even did a video on them the other day. So love Realty Income. I'm happy with the position, but I do want to build it up. But I have a couple other opportunities that I think deserve the money more than Realty Income right now, especially because it's already such a big position, and I have another option that I think will give me better cash flow at these deflated prices. Next, we've got Coca-Cola sitting at $63.53. Pretty much break even today, hasn't moved much. 10 shares, $635.30 of market value. Average cost is $60.84. 1.3% of the portfolio is in Coca-Cola. Today, like I said, pretty much break even, but we're up 70 cents. Total, we're up almost $27, up about 4.41% or about 4.4% on Coca-Cola stock. Next, we've got Altria, which is up today 60 cents at $46.04, 315 shares, $14,503.18. Keep in mind that market value is going to fluctuate a bit because the market is still open here at 1, almost 2 o'clock. But $47.34 is our average cost. About 29% of the portfolio is in Altria. Today, we are up $90.58. Total, we're down $406.95, down about 3% on Altria stock. MO's paying me a dividend of $296.10 on April 28th, and that will be added to my $52. And I believe as of right now, my plan is to put that into Rowe Price. Next, though, we've got Apple, which is up $1.02 today as of right now. Only one share, of course, $166.24 is going to be the market value because that's what the price of the stock is, and with only a single share, it's going to directly affect the stock price. Average cost is $132.66. Only 0.33% of the portfolio is in Apple. Today, we're up $1.06, up 0.64%, but total on our single share, we are up $33.61, or we're up 25% on Apple, which is a phenomenal return. This is one of those in the portfolio that I do really want to build up and be one of my biggest players and payments throughout the year. It's just going to take a lot of capital to get there. Right now, I believe they pay around 20 cents a share. So at $166 a piece, it's going to be a while before that passes the second stock in this set of months, being ABBV. But this is a high-quality company. I use Apple products all the time. I'm a huge fan of Steve Jobs. I actually just bought his autobiography, and it is pretty high up on my list to read. So hopefully I get that book read relatively soon. I do have a couple of other books that are ahead of it currently that I want to read before the meeting. But I do love Apple stock. I love Steve Jobs. I love the innovation of the company. I know that they have pricing power, huge brand and customer loyalty. So a lot of positives for Apple. But the big thing that I look at when I bought the stock, the thing that really made me want to purchase them, is that services growth. It's one of those markets or segments in their business that I felt like got overlooked for a really long time, and now that they're finally generating revenue and it's getting closer and closer to the overall iPhone revenue, that people are finally starting to see it. But love Apple, a lot of things to like about the company. Next, we've got AbbVie, which is actually down $1.66 today, which is good to see. Not even close to where I need it down to though. But right now at 159.53, down $1.65 or down 1% for the stock today. 95 shares, $15,150.60. So pretty big position here. Average cost is right around $95 a share. Around 30% of the portfolio is in AbbVie. Today we are down $160, down 1%. Total we're up $6,100 or up 67.6% on AbbVie stock, with a dividend coming in on May 15th of $1.4060. But guys, the crazy thing is, when I first bought this stock almost 3-4 years ago now, it paid $1.07. So the dividend has grown by 41 cents per share in 4 years. That's phenomenal dividend growth. As well as, of course, I'm sitting on a huge double-digit gain. But for me, guys, it's really about the profitability of the company and how much of that profit they're paying to shareholders. And AbbVie is one of those companies that I did a really good analysis on, and it's paying off. This is one of the few that I got to buy at a really discounted price. Other stocks like Altria or Coca-Cola, even Realty Income, I didn't get at the best price. But AbbVie is the company that I bought and did a really good discount model. Like when I did the metrics, I was really aggressive about it too. So that's the other thing, is I did my analysis, and I've stood by it, for 4 years, and it's paid off. I mean, it doesn't always work out that way. VFC Corp wasn't that way. AT&T wasn't that way when they bought DirecTV, and once they bought Time Warner. It doesn't always work out long term, but AbbVie is by far, my golden goose. So I definitely do not want to sell out of it, regardless of how far up it goes. Then we got Rowe Price, which honestly I think could mirror AbbVie when it comes to dividend growth and price appreciation. So right now we've got 101 shares of this aristocrat, right around $11,000 worth of market value. Average cost is right around $122 per share. 22.6% of the portfolio is in Rowe Price. Today we're down $77.77, down about 70%. It's a lot of sevens. Total return, we're down around $870, down 7%. But guys, just like I said with AbbVie, so I bought them at, I think it's like $95. Yep. So at 121 right now, obviously I have a huge I've dropped, right? I have a huge opportunity here with Rowe Price, and that's why I said the dividends that I will be paid are going to be going to Rowe Price, because that cost down average opportunity is steep, and that's exactly what I want as a dividend growth investor. I want to buy companies, high quality, that are, sorry, Robinhood's giving me a notification. But that's what I want. I want to buy high quality companies with great dividend growth, great growth prospects, low payout ratios, that have the free cash flow to keep rewarding shareholders for decades to come. But I want to buy them at the right price. And right now, Rowe Price is at a price that I would want to put more money in, because I can cost on average pretty aggressively and lower that cost basis. But guys, here's the thing with Rowe Price. At 122, I still locked in $24 upside, which is of course not as aggressive as what AbbVie was. But $24 per share on 100 shares, it's $2,400. So on a $10,000 investment, I make $2,000. That's not too bad, or more given if it goes up, right? So this way I'm locking in a better overall price, a higher yield. I get paid more dividends for less money per share, and I think this could easily become another AbbVie if I get enough free cash to put into the stock at this price. Next, I'm going to go through my watch list pretty quickly. Google is down today, but not quite down far enough for me to purchase it. At 105, it's 52-week high. I've got about $26 of upside, which is great, but I would rather have it at, say, $190 to $100 per share. That way I could get $30 to $40 of upside. So love Alphabet. It's one of the few growth stocks I'd want alongside Berkshire, but I don't want it at this price. Then I've got Visa. You guys know this has been up for a while. I want to buy it around 190 to 200 to get that $30 to $40 upside, so I don't want it here. And then Berkshire Hathaway, I want it down to $300, which it's gone all the way down to about 260, which would have had $40 or $60 of upside for 300. So we would have had like $80 of upside right now. So people who bought that around the 260 mark are making a killing right now. But that's one of those that it doesn't fall a lot. Doesn't fall very, very fast either. So it takes a big economic event for Berkshire to go down. And I understand that, and I'm going to patiently wait. But this is one of my top 5 foundational stocks. Not when it comes to dividend stocks, but personally my favorite stocks. If I had to list them, I would say 1 is going to be Coca-Cola. 2 is going to be Apple. 3 is going to be Rowe Price. 4, I would probably give it to Realty Income. And then 5 would be Berkshire. So those would be my 5. But guys, let me know what your top 5 favorite stocks are down in the comments below. Remember to hit the like button on this video and hit subscribe so you don't miss any portfolio updates. With that being said, guys, thank you so much for watching, and I'll see you guys tomorrow with another portfolio update. Take care.